Hi class, a pleasant day to all of you. This is your Prof. Sir Dan, and in this video we are going to discuss formation of partnership. Okay, the lessons that we can cover in this video are: first, we are going to identify different parties to formation of partnership. Next, we will have the discussion on the formation of partnership in the various forms of contributions. And next, we will do an illustration on the formation of partnership of individuals and the accounting considerations in recording the transactions of the formation of partnership. Okay? Plus, first we have to identify who are the parties to formation of partnership. Okay? First is that two or more individuals with no existing business. Normally, if it is a group of friends, and among the friends, there is no one who has an existing business, but they want to pursue a certain business. And if they want to pursue the business, they have to agree, okay, that they will form a partnership. So in this case, it will be an individual forming a partnership with another individual. So, in partnership, it can be two or more. So, they can invite another individual, as many as 20, okay? But of course, the ideal number of partners, the lesser the better, okay? So, here, these three individuals can now form a partnership in as a business partnership, okay? And another way of forming a partnership is that a sole proprietor or sole proprietors and individual or individuals. In this situation, okay, there is a sole proprietor who would like to invite an individual to be his partner. Okay, what could be the possible reason? Probably this sole proprietor would like to have additional capital. So, and that individual has additional capital, so he can invite that particular person to invest. And in this kind of investment, okay, they have to now register as a partnership because sole proprietor is only one owner. So, in considering that there will be two owners, so it's now a partnership. Okay. So this can be, they can also invite another individual to form a partnership or another sole proprietor to be part of the partnership to establish the partnership business. Okay? And another way of forming a partnership is that a sole proprietor with another sole proprietor or proprietors. Okay? So a proprietor can invite another proprietor to join together to establish a partnership. Or they can also invite other proprietors to be part of their partnership. Okay, class? So, in summary, individuals can form a partnership, two or more individuals, and a proprietor can form a partnership with another individual or individuals. And the third is that several proprietors can join together to form a partnership. Okay? Class, take note that the number of partners is minimum of 2 and maximum of 50 in any kind of business. However, there are businesses that the maximum number of partners is less than 50. And one of these businesses is bank. Okay, the maximum number is 10. Okay, but the acceptable maximum number of partners is 20 in general. Okay, let us now discuss the forms of contributions or the investments. Okay, what can be contributed by partners? First is cash and other form of assets. So you can invest cash. A partner can invest cash, or the partner can invest other form of assets. Okay, these are non-cash assets. So, for sole proprietor, of course, the sole proprietor can invest the assets of the business. And since it is a sole proprietor, of course, due to the ongoing operations, continuous operations of the sole proprietor obviously will incur certain liabilities. And liabilities of the business can be absorbed by the partnership and it will be deducted from the value of the invested assets. Okay, so it means that the sole proprietor, okay, will invest everything in the partnership. However, if there are liabilities, it has to be deducted on the from the value of the assets of the sole proprietor. Okay, another form of contribution is the service from the partner, the professional, the management, or the administration services of a partner. Okay, that can be part of the that can be a form of contribution in the partnership. How are we going to make a valuation of the investment? If a partner is investing cash, okay, the valuation is on its face value. So if the partner is investing 500,000, so the valuation of the investment of that particular partner is 500,000. However, if the investment is non-cash assets, so the valuation will be based on the value agreed by partners. Okay, so those partners will do a valuation, and of course, their valuation should be a reasonable basis, and the most reasonable basis of valuation is the fair market value. Fair market value is the estimated amount that there is a buyer who is willing to purchase the item in an open market. For example, this vehicle, there is a buyer for 800,000. Of course, me as an investor, I would like that my vehicle will be valued by the partnership in the amount of 800,000 because there is a willing buyer in the open market at 800,000. So, the sole proprietor, of course, as we have discussed, can invest the assets of the business. So, in investing the assets of the business, the assets of the business prior to formation should be adjusted to reflect the fair market value or values agreed by partners. Okay, it has to be revalued. Okay, it can be revalued upward or downward depending on the agreement by the partners. Adjustments on the revaluation of assets should be recorded in the books of the sole proprietor, okay, before transferring to partnership books. So any adjustments should be reflected first in the sole proprietor's book, okay, before transferring it to the new books of the partnership. Okay, class, let us have an illustration. Here, two or more individuals forming a partnership, and this is our situation. Partner Agapito will invest vehicle in the partnership. The original cost of the vehicle is 1 million and accumulated depreciation is 270,000 or a book value of 730,000. As we have learned, okay, in our basic accounting, 1 million minus 270,000 minus a cost minus accumulated depreciation, that is our book value. So in this case, 1 million minus 270,000, we have a book value of 730,000. However, if the vehicle will be sold, its fair market value is 800,000. So meaning there is a willing buyer for the vehicle at 800,000. The other partners, Nora, will invest cash of 500,000 and Philip will invest his services for a 10% profit. The partnership will be called A and P partnership. Okay, let us summarize. Our partners are Agapito, Nora, and Philip. So based on the above, Agapito will invest his vehicle and the book value of the vehicle is 730,000. However, there is a willing buyer of at 800,000, so the fair market value is 800,000. And Nora will invest cash worth 500,000, and Philip will invest his professional services. And by investing professional services, Philip will get a share of 10% from profit. Okay, so Agapito's personal records. Let us take a look at Agapito's personal records. Okay, and then we will take a look at the partnership book. So here is Agapito. Okay, will invest the vehicle. And on Agapito's personal record, the cost of that vehicle is 1 million, and there is an accumulated depreciation of 270,000. So the book value in Agapito's personal record of that vehicle is 730,000. However, there's a willing buyer to buy it at 800,000. So there is a fair market value data, which is 800,000. So the difference of this is 70,000. Okay, so of course, Agapito would like to have his vehicle valued at a higher amount. So Agapito would advise or would insist to other partners that his investment will be valued at 800,000. So what Agapito could do is that do an adjusting entry to reflect the 800,000. So the adjusting entry, okay, would reduce the accumulated depreciation, because accumulated depreciation is only as an estimate, as we have learned in adjusting entry. So it means that we have overestimated the depreciation, okay, in consideration with the fair market value. So we can reduce the accumulated depreciation by 70,000, and then the reduction of the accumulated depreciation, we will consider that as other income. We can use an account called gain from fair market value of 70,000. So if Agapito will do this entry, now the accumulated depreciation will now be lesser by 70,000. So it will only be 200,000. So the book value now will be 800,000. After this adjustment, then the book value will be 800,000. So there is no more difference. So the book value now reflects the fair market value. Okay, so after doing this entry, of course, it's now reflected as 800,000. Then Agapito can now record the investment. So here, Agapito will now give the vehicle in the partnership. So instead of vehicle, he will now have investment in partnership in the amount of 800,000, and then remove the vehicle from his record. So to remove that, he will now debit accumulated depreciation vehicle, which is this 200,000, and then the cost credit the cost of the vehicle at 1 million. Okay, this will be done by the accountant of Agapito. Okay, now the accountant of the partnership, okay, will now record Agapito's investment. So the accountant of the partnership books, obviously, uh, there can be two different accountants. Okay, now in the partnership book, okay, it will be recorded. The partnership will now receive the vehicle from Agapito. So it will be recorded at its fair market value, and then credit Agapito capital. So Agapito will now have a capital of 800,000 in the partnership. Okay? Oh, by the way, the accountant has an option to record it like this. Okay, record everything, since that if the partnership accountant has a knowledge on the history of the vehicle, the accountant can record it like this. He can get the invoice or the invoice price of the vehicle at 1 million, and then record the accumulated depreciation as a reduction from the cost to get the book value of the vehicle, and then record a credit to Agapito Capital at 800,000. So the accountant can do it like this: debit vehicle at 800,000 and credit Agapito Capital 800,000, or reflect the accumulated depreciation and the cost in the partnership book for the vehicle. Okay? And now, class, for Nora, Nora has cash of 500,000, and Nora will invest that cash in the partnership book, in the partnership. Okay, so for Nora, she will do this entry in her record: debit investment in partnership of 500,000, and then this cash of 500,000 will now be given to the partnership. So she will credit cash of 500,000. So in the partnership book, the accountant of the partnership will record the cash received from Nora at 500,000, and then give Nora a capital of 500,000. Always note, class, that the investment that should be recorded in Nora's record should tie up with the capital that was recorded in the partnership book. Okay? Similarly, when we did this to Agapito, take note that the investment in partnership recorded in Agapito's personal record tied up with the Agapito capital in the partnership book. Okay, class. Now for Philip. Philip will only contribute his services. Obviously, there will be, if Philip will contribute his services, he will be entitled for 10% profit. And there will be no entry in Philip's book because he is not giving anything yet. He has not given anything yet. He will still provide services in the partnership, okay, during its operations. So in the partnership book, the contribution of Philip, which is his services, will only be recorded as a memorandum entry, which states that Philip invests services for a 10% share on profit. Okay? And now, let us recapitulate. In the partnership book, what were recorded is that we receive investment from Agapito, we receive investment from Nora, and from Philip. Okay, this is what were recorded in the partnership book. Based on this, we can now have an opening statement of financial position for A&P partnership. Okay, based on these entries, we will have our assets, which will be cash contributed by Nora at 500,000. We will have a vehicle contributed by Agapito at 800,000. So the total assets of the business is 1.3 million. Okay? For our liabilities and equity, we don't have any liability yet. So our equity will be Agapito capital of 800,000 and Nora capital at 500,000. Okay? So for a total of 1,300,000. Okay? Of course, Philip will not have any capital here for any capital contribution because he will only contribute his services. Okay? So that's it. This is the statement of financial position. Let us have a second illustration. And in this illustration, two or more individuals forming a partnership with liability. So this is our situation. On July 1st, Nilo Burgos and Helenita Ruiz agreed to form a partnership. The partners agreed that Burgos is to invest cash of 700,000 and Ruiz is to contribute land with a fair market value of 1,300,000 with 300,000 mortgage to be assumed by the partnership. Class, this 300,000 mortgage means it's a mortgage payable to be paid by Ruiz. Okay, what happened on this is that Ruiz has probably secured a loan from the bank, okay, and pledging or mortgaging the land as a collateral for the loan, okay. So here, what is required is to record the investment of partners in the partnership book. So we are going to record already in the partnership book. So we are not going to make any adjustments or recording in the individual records or personal records of Nilo Burgos or Helianita Ruiz. What we will be doing is doing the entries in the partnership book. So in this, for Nilo Burgos will invest cash of 700,000. So in the partnership book, okay, the partnership will receive cash of 700,000 from Nilo. So the entry will be debit cash of 700,000 and give Nilo Burgos a capital of 700,000. Okay? For Helenita Ruiz will invest land with a fair market value of 1,300,000 with 300,000 mortgage to be assumed by the partnership, meaning that the obligation of Helenita Ruiz will be assumed now by the partnership because the land is invested in the partnership. So the entry for this is that the partnership will receive the land worth 1,300,000. However, that land has an obligation to be paid to the bank. So the partnership will record a credit to mortgage payable of 300,000. And now the difference of this will be Ruiz capital at 1 million. Okay? So class, this is it for this video. So enjoy your day class. Have a pleasant day. Bye for now and hear me again.